All right, I'm Erica. I'm calling the meeting to order. We'll have the Pledge of Allegiance. Stand if you like. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Walt, would you do the roll call?
Yes. Just as a reminder, too, if everybody can have their mics on when they're talking so the camera can pick it up. Frank DeCristofaro, Sarah Inamorado, Kimberly Joyce.
Here.
Jennifer Liptak.
Here.
Corey O'Connor.
Here.
Sarah Roca.
Here.
President Brusslers.
Here. Are there any public comments?
No public comment.
All right, President's update. On an update for the Bylaws Committee, we met yesterday, 2 days ago. We met this week, and we finalized, we got through the whole thing. Brian Gabriel is updating it, so we expect to circulate electronically to the board in the coming weeks the draft bylaws, and then we will propose them formally at the November meeting, and then we'll have a vote on them at the December meeting. And then we're in very preliminary talks, and I haven't talked to many or any of the council people about this, about changing the meeting schedule next year to be bi-monthly. So I'll reach out to you all to discuss that. Also, Corey, thank you for reminding us to say something. Frank DeCristofaro's mom passed away this week, so we sent him our condolences. Next are board approvals. Can I have a motion to approve the board meeting minutes from September 19th, 2024?
So moved.
Second. Hearing a motion and a second, is there any discussion? Hearing no discussion, all in favor say aye. Aye. Any opposed? Hearing none, the motion passes. Next, can I have a motion to accept the financial statements, which include the pension fund assets, the statements of changes in plan net assets, and the RBAC balance sheet for August 2024?
So moved.
Second. Hearing a motion and a second, is there any discussion? Hearing none, all in favor say aye. Aye. Any opposed? Motion passes. Next, we have applications. Can I have a motion to approve October 2024 applications, which include 6 early retirements, 9 full retirements?
So moved.
Second. Hearing a motion and a second, is there any discussion? Hearing none, all in favor say aye. 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 Any opposed? And we can also reflect that the executive Inamorado joined us a couple motions ago. We're going fast. This is half the speed of last year, though. Next, we have manager reports with Walt Szymanski.
Thank you very much. If you turn to the Manager's Report tab in your book, I'll highlight some areas on the dashboard. Retiree payroll is up 3.99% as of year to date. Total contributions made are up 9.8%. Contributions refunded are up 2.44%. Total retirements are up 25.51%. If you turn to the next page, pension estimates are up 7.11%. Capital calls are up 5.58%, and as of the last meeting, there was 1.543 million in capital calls. I have the office budget as of September 31st, September 30th, 2024. Are there any questions? All right, so then I have some board updates. So myself and the administrative assistant with the office visited the county jail on August 30th of 2024. We were there from 10 to 2. Estimates were run for jail employees and all retirement questions were answered. We had a very high attendance, so due to this attendance, we plan to schedule a follow-up meeting, and the next meeting we're going to schedule from 2 to 6 for those who start after the 2 p.m. shift. The board president and myself visited the offices of Phase 14 on September 27th, 2024. Phase 14 staff were very knowledgeable, and they explained the continued function as our disability pension consultant. They answered all the questions that we had, and I have included the prior year's contract just for your review. There is an option to renew the contract for 2 years at the 2024 rates. We're not asking for any vote today, but just to take a review on it, and it'll be presented more than likely in the December meeting. Also, we had talked about changing, so now that we have a transcript for the board meetings, we're going to do an agenda synopsis rather than summary minutes. So the new format's in here for your review. If you have any questions or anything you'd like to see changed on it, let us know. Otherwise, moving forward, we'll start posting that briefly after the meeting, so that way it's on the website for everybody to take a look at. And just an update on the retirement calculator, excuse me, it's now available to all court and county airport employees. So we had worked through with their IT department, so everybody at least on the county network now should have access to that.
Is there anyone who wouldn't? So it includes all the groups?
All the groups should be included now,
Okay.
yes.
And it's just that they need to be at a county computer?
Correct.
And the retirement office has a computer available in their
We
office?
do. We have a kiosk in our office, and then we'd offer to help set up a kiosk anywhere else that might need to be done.
Thank you.
You're welcome. And that's all I have for
I
this
just
month.
jumped in on the questions. Are there any other questions for Walt?
I just have one question. So that's for active employees. Are the retirees able to use the kiosks if they go to a physical location?
So as of right now, the retirees, we're going to be working on that portal next year. So that we're going to try to make a interactive portal. They have to print award letters, so forth. As of now, no. It's just for running estimates for active employees.
Okay, thanks.
Once you have what kinds of things will the future retiree thing do?
We're still in discussions with the developer on that, and I'll probably bring a presentation in November, December on what that would look like and new costs that may be involved with doing this.
Thank you.
You're welcome.
Any other questions? No. Thank you, Walt.
Thank you.
Next, we have Brian Gabriel, our solicitor.
Thank you, Erica. The solicitor's report is current as of October 10. There is one action item, and it is referred to in the first item in the solicitor's report, starting at page 1 and carrying over to page 2. It is also the subject of an attachment, which is a memorandum from our class action counsel, Bernstein, Litowitz, Berger, and Grossman. So the request is for a motion to authorize BLB&G to represent the Allegheny County Employees Retirement System and to seek lead plaintiff status in the securities action filed at Methode Electronics, Inc. in the United States District Court for the Northern District of Illinois.
Would anyone like to make such a motion?
So moved.
Second.
Hearing a motion and a second, is there any discussion? Hearing none, all in favor say aye. Aye. Any opposed? The motion passes.
I have no other specific items to bring to the board's attention, but I'd certainly be happy to answer any questions.
Hearing none, thank you.
Thank you.
Next, we have, I prepared a sign for this, Chris Brokaw and Tim Walters from Mariner.
Thank you. Yeah,
Did I do all right this time? 1 out of 3.
1 out of 3, well, ain't bad. So if you turn to our tab in the book, page 1 of 25 is a memo with a recommendation regarding maintaining liquidity in the portfolio for benefit payments. So what we are recommending is liquidating the BlackRock liquid policy portfolio over the next several months. Really, it would be approximately 4 months based on the current liquidity needs in the portfolio, and also to authorize the pension manager to ensure that there's $15 million available mid-month in the retirement fund by mid-month, every third Thursday of the month, to pay for the pending benefit payments. And also, we would report back on any transactions that were made in the month to raise that liquidity. We would raise the liquidity from the portions of the portfolio that are overweight relative to the investment policy statement. Currently, there's about $26 million in the BlackRock liquid policy portfolio, and again, that investment would go to zero over approximately the next 4 months. So this recommendation really is a way to streamline the liquidity generation and authorize us to work together, that is Tim and I, to work together with the pension manager to make sure that the funds are available. So that is the recommendation that we're making.
Question?
Yes.
Yes.
So I just want to, this is a change in process. Normally, when we do a cash raise, the board has to approve every single cash raise. Is this a process where you're asking for us to not approve every cash raise and just get reported to every cash raise? Because that's a very different process than
Yes.
what we've done over the years for auditing purposes.
Yeah.
So I want to understand more deeply.
Sure.
I understand streamlining the process because we need to raise cash, but every time we have to vote on the cash raise, it's a reminder of us of our funding position, where we're taking the money from, et cetera, versus it being put into a report that we have to search through and not really have a conversation about. So I just
Sure.
am curious as to why is the recommended shift?
Yeah.
If it makes better sense process-wise, because other funds do it that way, sure. I just want to understand why this is a new recommendation, because
Right.
the standing process, not to say it shouldn't be changed, has always been capital raise, we have to approve it by the board. So can you just, because that's what this is. This is a blanket
Sure.
approval in perpetuity to allow for you guys to raise cash,
That's
right? Yeah, okay.
So the current policy that's in place, and one that started when we started working with the board with the liquid policy portfolio, was to have funds in the liquid policy portfolio so that we didn't have to come to every meeting and get that approval. And the current standing process and instructions that were approved by the board was, or is, to have $8 million in cash in mid-month, and if there is any cash requirement, to take it from the liquid policy portfolio. So this change does two things. One, it moves that 8 million to 15 million, recognizing that over time you have had larger cash requirements, outflows from the portfolio. So that moves that level from 8 million to 15 million. And the second one is to allow the portfolio to be fully invested in all of the core investments in the portfolio and eliminate the requirement for this liquid policy portfolio. So it is a slight change, and the change is, instead of drawing all the funds from the liquid policy portfolio and maintaining exposure there, to take it from the individual managers that are over their target allocation. But yes, you are right. The current policy and this recommendation does not require monthly board approval for the liquidity raise.
Do you have
I have a follow-up.
That's okay. So as a follow-up, I guess, for just monitoring purposes, I think it's helpful. I mean, when we review our stuff, Walt very diligently sends our things in advance so we can look
Right.
at it and we have our books. But I would just ask if this is where we're going to move to, that we have it we have a report of it every meeting. So then we can have just a discussion or just another acknowledgement of it, because that movement is very vital to us understanding our funding status.
Yeah.
I think so.
Oh, no, I
would ask
agree.
that we would do that, not just have it in the book for us to look at, like incorporate it as a monthly report of some sort. That's if the board chooses. So.
Yeah, I appreciate all these questions. Is that, is a report that looks something like, I'm imagining maybe it's a page that says X was raised out of the core investments from like this amount from these ones, and maybe if they were over target or not? Is that the kinds of information
You were
that
going to
reached
put
to
a
them.
report in this anyway. That's basically it. I mean, it makes sense to try to adjust where things are overweighted, and again, that always changes based upon how funds are doing and such. But I just think it's a good process for us to understand where the money's coming from and just have like an update on that, if that's okay, because it's not like we're in a position where we have, excess. We are very strategically now trying to take money out of places that make the most sense and add the most or hold the most value within our funds. So I would just ask that it would be not just in the book for us to read, it'd be just as part of our monthly report, someone's report.
Explicit. Yes.
Yeah. And it sounds like between now and the next meeting, Walt and Chris can discuss what that reporting will look like and whose report it would in. And I'm realizing we didn't put a motion for this on the agenda, so I think it would make sense to give us a month so it's not like a surprise and put a motion on next month's agenda to approve this proposal. And sorry, are there any other questions? One of the reasons I asked Mariner to look at this is my understanding is that some of the reason this liquid policy portfolio was in place is that there was a period of time where there wasn't great cash management and the board was receiving very late requests. And so this was put in to react to not having, I think, the level of consulting that the plan needed. And as Mariner has shown with their reporting and their attention to things, that I think they have shown their kind of wherewithal, and that this thing that was, I think, put in as a backstop for where we were a little short isn't needed anymore.
The other thing I recall, and Walt would probably be the other person that's here would remember this, is that it was a smarter place to put the cash that was starting to come in from all the funds that we had in the alternative investments, because we were starting to get more funds and it made more sense to put them, make money off of them, and then use them instead of selling off other investments. So it was part of a stronger cash management system, I think. And we all thought it was a great idea, and I still think it's a very good idea. It was a good way to receive that cash back in and then use it for what we thought was best for the board. So.
Yeah, and we were also, is it fair to say we were funding more capital calls?
Yeah,
at that point?
we had gone through, over the last decade, first it was lots of capital calls, and on a monthly basis, it was my understanding that, sometimes it would be the week of the meeting, the day before the meeting, that there was, we need $3 million, $5 million, something of that nature. And that's how we arrived at this solution. Well, it went from lots of capital calls, money going out of the plan, to several years of $20, $30 million coming into the plan, and that's exactly what you're referencing, Ms. Liptak. So right now, at least at the present time, there's not that kind of cash flow, but that's some of the history and some of the reason for having that liquid policy portfolio is no longer present. So that's where we are.
In addition to a decade-plus low interest rate environment where money market funds weren't yielding anything. And so now that we have above a 4.5% yield on money market funds, it warrants a relook.
And what about in 2 years when we don't have 4 on money market funds? Will we be re-looking at it?
I think then the shift is you don't keep as high of a balance in a money market fund because it could be a potential drag on returns. So maybe not a reaction to add funds or re-add a liquid policy portfolio, but a reevaluation of the balance that you keep in the money market fund versus being fully invested.
Okay, thank you. Are there any other questions? Thank you. All right, what's next?
All right, next item, page 2 of 25, the Emerging Minority and Women-Owned Investment Manager Program. These are the guidelines that you have for the program, with a couple of highlighted draft changes to them. So if you look at page 2 of 25, the slight changes are, one, the date, which of course we can advance forward, to the next meeting or subsequent meeting. And the second one on this page is the implementation criteria. The item that's added there addresses adding new managers to this program and focuses on making sure that the plan is sufficiently funded before adding new managers to the program. So that is really the one item that changes on pages 2 of 25 through 5 of 25. So they're here for the board's review.
Oh, are there any questions? So this is basically, and I'm realizing we didn't, sorry, are there any questions before I start talking? Okay. I realize we didn't state what what funded status we'll be using. So that's,
Oh, 80%
no, sorry.
is in here.
Todd probably has like 10 different funded statuses in his report. So we should choose, we should work with the actuary to decide on which one we'll be
The
looking at.
specific language.
So we know which one to compare it to.
Right.
And we are looking at this, I had heard, I think I know I feel this way. I think there had been some member curiosity around having an emerging managers plan that invested these small amounts when our plan is so underfunded and looking to streamline a number of components. So that's why we were looking at it this way. I didn't pre-call anyone for this meeting, so this might be the first time folks are hearing it. So I'd just like to, if there's any discussion, we're happy to hear it now, or we can put this on I don't know if there's thoughts on if we want a motion on it today or if we want a motion on it next month. No strong opinions.
I think it would be helpful, I think this is great. Your point was very good. Which actual report status are we going to look at? Total funding, like which one? I think we need to clarify that as a board because they are very different. I mean, we also have, the controller's office also has a different mechanism for developing funding, so we should probably clarify that before. But I think this is very good. I appreciate the work.
Yeah. If anyone wants to make a motion, they can make a motion, or we'll put it on next month's agenda for a motion. Yeah, we're going to do it next month. Is
All
that
right.
okay?
Page 6 of 25. So in our informal conversations before the meeting, the question came up, are the markets good? And the answer is yes. The markets continue to perform well, equity and fixed income. If you look on page 6, this is through the end of September. The S&P was up over 2%. Small cap equity was up a bit under 1%, international about 1%, and emerging markets, best performing index, this is page 6 on the top left, at over 6.5%, driven by some very strong performance in China. One item of note, if you look at that Russell 1000 Growth Index, it's the fourth one down, and you see that year to date, it's up 24%. And I know that we've mentioned before, this is the Magnificent Seven and all the large cap tech companies. Interesting thing that happened in the last quarter is you see for the trailing 3 months, this Russell 1000 growth, so the third quarter was up 3%, and all of the other indices outperformed the Russell 1000 growth. So some of the other parts of the market, small cap, mid cap, international, performing better than growth. Growth had done very well for a long period of time. So diversification in the portfolio, having other investments, they may not have done it as well in 2023 or the year-to-date period, but right now, some of those other investments are outperforming. the large cap growth. If you look at fixed income, the next line down, the broad bond market, US aggregate, was up 1.34%, and interest rates declined all across the yield curve, short-term, long-term. The Fed cut interest rates, and so that led to positive performance within the bond market. Now, short-term rates, if you look at the next set of numbers and the rates, the US 3-month Treasury, 4.62%, so down from at the beginning of the year, 5.33%. So interest rates declining, helping the returns in fixed income through the end of the quarter. Now, when we look at any questions on the market? Now, when we look at your portfolio on page 9 of 25, and this data is through the end of August, you see year-to-date up almost 6%, and for the month of August, up 1.25%. Some of the best performing parts of the market in August for the month, non-US equity, so international stocks, and core bonds. So the second asset class down from the top, and the third. So declining interest rates, which again continued through September, helping the bond market, and as well the market broadening out, not just being the US large cap growth, leading to some other parts of the equity market showing strong performance. Overall, when we look at your portfolio, another item of note would be down towards the middle, the private real estate. You see in the year-to-date period, slight negative performance ahead of that index, which was down 3%, and over the past year, the index is down 10%, and your real estate investments slightly negative, down 1.6%. So they are the part of the portfolio with the largest relative outperformance. But again, you can see over the year-to-date and the trailing 1 year with the US equity market up 17.9 for the year-to-date and 25.3 for the trailing year, really driving the positive portfolio performance. $962 million, the top line, $962,430,000, the value of the portfolio as of the end of August. Those are really all of the prepared performance comments that we had. Any questions on the performance of your portfolio?
Hearing none.
All right. That is all the prepared remarks that I had. We'd be happy to answer any questions. Oh, page 17. Asset allocation. Again, the gray bars are your investment policy statement guidelines. The triangles are your current allocation. And taking a look at this just to confirm that you are within the investment policy ranges.
And I feel like I ask about rebalancing
Yeah.
like every month.
Yes.
When
Yeah.
when do we say take some out of US equity and put some in the high yield fixed
Right.
composite?
Great question.
Thanks.
And this kind of goes into the first recommendation and with rebalancing. I would point to the lowest bar there, the last one, liquid policy portfolio. You see that's under target. A lot of that is invested in public stocks and bonds. It's invested in those markets through ETFs. So that really balances out to a degree the equity and core bond overweight. So that is a large part of why some of those triangles aren't on the line. Other things, when you look at infrastructure, real estate, Those are illiquid investments. So we are trying with the cash flows to manage these over and underweights. And that's really how, to a large degree, how we move the portfolio from an overweight position back to target. Each month you use about $6 million.
Okay, so each month but right now you're pulling the $6 million out of the liquid policy. And in the
Yes.
future, if we move to do the thing we discussed earlier, then
Yes.
you'd be taking out of the overweights.
Absolutely.
But
Yes.
if you wanted to put into an underweight, would the board have to approve that?
Yes.
Okay.
Yes.
And so, sorry, you started your comments with the liquid policy portfolio.
Yeah, so
is-
the black bar is the target. So the liquid policy portfolio is under its target, and the offsetting over target weights are in the equity and core fixed income.
And are those just the three I imagine that the liquid policy portfolio was something like the whole thing except for the illiquid
The
investments.
illiquid parts, yeah. So
Okay.
it does have a portion of high yield investments in
Okay.
it as well. Yes,
Okay, thank you.
sure. Thank you.
Any other questions? Thank you, Mariner.
Thank you.
Next up, we have Ed Boyer from Asset Strategy.
Good morning, everyone, or good afternoon, pardon me. So this will be our last report, and we're going to start on our section here about the PME, Public Market Equivalents. We'll go to page 2 and 3. And so this accounts for all of your partnership holdings and is a snapshot in time about the performance of the funds as well as the index. Excuse me. The first column there is the name of the fund, the net IRRs. The index is next, and those returns of the index are in the fourth column, and the outperformance then is in the fifth column. So this report does not need to be shown every meeting. I mean, twice a year would really be sufficient. They just don't move that quickly to be measurable or significant, and you can't get out of them. So, it's not like there's an action item to be taken up. But it's probably more important directionally to know where you're getting value. And on page 3, the outperformance has, in our view, not been satisfactory. You can see in the outperformance column down in the bottom row, it's 0.93. And it would have been our goal at the outset to have this at least 300 to 500 basis points over the index. As you know, a lot of these funds were in place before we arrived to make some adjustments to the whole program. Any questions on these before we go to, let's see, the next page are the funds.
I appreciate you adding that locally sourced fund column. So that would indicate that it came at the recommendation of a board member, or what is locally sourced fund? How do you indicate that?
So it's one part, and I'm not being cute about this, we didn't source it. It came in the door. It came either through the office or through a board member or a relationship that someone had. When we arrived.
And you arrived in 2008? Or when did you arrive?
Oh.
Sorry, because there's some vintage years that would have been from before you.
So the first fund that we made an investment in would have been 2013.
Okay.
And then, of course, when we arrived, for example, hang on, let me find the name here. The real estate fund had a lot of the holdings, so that would have been Valstone. It was named something else at the time. So Valstone was already in the portfolio, and you know, there was a relationship there that kept getting additional allocations. Then, you know, there are others that were of the same nature. So like, if, I'm not trying to have you jump around, but if you just look on, let's see, it would be the first unnamed page, or unnumbered page, and that list, I'll come back and answer your question
Okay.
in just a moment, Erica. But that lists them in order, and we can tell that, you know, we did not do Adams or Goldman Sachs. The first one we did there would have been Pharos and Constitution Capital. Blackstone came through a relationship at the board level, and that's sort of how we aggregate it and look at it. I'll give you a better picture in just a moment, but to be clear, if I don't mind asking you to drop back to page 5. So these means that it was our investment team that identified and presented and did the due diligence on these partnerships.
On the page 5 partnerships.
Page 5.
So page 5 partnerships are ones you all found and brought to us and
Right.
we invested in.
If I could add something to that, so I recall a lot of them were here, I got here in like mid-08, and there was a lot of confusion, at least for people like me, as to how these funds are being managed. And our existing manager at the time, who did the work that Mariner's doing now,
So that was
Wilshire, did not provide any management of these overall oversight. And because they said they didn't have that within, this is me speaking, not them, but I'm surmising, they didn't have a specialty in there. So some of us board members, including myself, felt like we need to have someone that knows what they're doing, because these are complicated investments. So an RFP process went out, and that's where Asset Strategies came in to try to organize and coordinate some of these. And so, you know, but a lot of these were here before I got here. I'm just going to say that.
Thank you.
Yes, they
Yes.
were.
They were here before I got here.
And not to go on too long, the outperformance from our funds, you can see there under that column, is 10%, or 1,000 basis points. So that would be a success by any definition. And what we did, in addition to what your comments related to Wilshire when you arrived, Jennifer, is we made smaller allocations. Part of this was as part of the education process to the board, to realize that these strategies, you know, were executed, implemented differently, and that by doing that, we would create more variability in the realizations of the investments. And because as you're seeing now throughout the portfolio, you can't control them, and you never know what the environment is to which the managers want to exit. So by having more partnerships with different strategies, we increase or hopefully optimize the cash coming back.
Can I say something else for the record? I do not know which funds were locally sourced. So I'm just going to say that. So whatever was brought to us, I have no idea if they were whatever you're calling locally sourced or not. They were just brought to us with a recommendation. So I just wanted to make that clear. Okay. Thank you.
Thank you. And so they would
They would come through. They
through
would
Ed?
come through the,
We would, yeah.
yeah, but I don't know which, like, I couldn't tell you, like, I'm guessing now. Obviously, you can see them here, but as a board member at the time, if some of these were brought forward, I wouldn't know, because I never locally sourced anyone. I mean, so I just wanted to clarify that for myself on the record.
And it's not reasonable to expect you to remember from the deck where the address was. Exactly. So, you know, it's just not reasonable at all. But there are clearly some that are local. You know, Draper Triangle they changed the name to Magarat. iNetworks, another one.
Oh, so were they both local firms and provided by
Yes.
someone that didn't initially come out of your firm? That's
Right,
what you're saying?
yeah.
Okay.
So how
Along
do we
with,
make that process more transparent moving forward?
Well, I think that's the plan.
Right.
But what I'm saying is someone that was here, and Sarah's been here a long time, I don't know that, and I never locally sourced anyone.
Yeah, and so maybe it's when Mariner is bringing us a recommendation, they provide us with an indication of either it's a thing our team came up with, or it's so-and-so, right, like I was at an event yesterday, there were some private equity people talking. If I thought one was swell and I sent them their way, they would disclose, like, so-and-so board member, so-and-so individual, like, brought this one to our attention, and then we did our due diligence so that board members can be clear about the process to bring it in front of the board. Is that a thing? It sounds like that's a thing we should add. And is that a thing Mariner can do? Just like indicate where it came from? Okay.
Yes. In fact, I think we'll be required to do that.
Just because of that's how you operate?
Yes.
Okay.
Yes.
Are there, I think this is a useful discussion. Are there any other questions or concerns on this area?
Okay,
Going.
and then the final 3 pages that do not have numbers on them are the list of the entire group of buyouts, growth equity, private debt, real estate secondaries that were in the portfolio. And it's a summary of all the funds aggregated. And, you know, so to the extent that it's helpful to Chris or Mariner, you know, to look at ideas that are already there that have done exceptionally well, you know, feel free to, you know, use them. We don't have any rights to them at all. And then just from a strategy point of view, the secondary market and opportunities are quite compelling. So we would, and not only that, but they have a shorter life cycle, so you get distributions more quickly, and that also helps with your cash flow. And you're able to buy them at a considerable discount.
Thank you. Are there any questions, or do y'all need a second? No. Oh, okay. That's okay. Any other questions for Ed? No. Thank you. Thank you, Ed.
It's been a pleasure working for you.
Thank you, Ed.
You're welcome.
Appreciate your candor.
Well, we hope we deliver value for your beneficiaries.
Thank you. And then, any new business? Is that me? Oh, it was my microphone. Our next meeting will be held on November 21st, 2024. And can I have a motion to adjourn? Oh, yeah.
Just one final point. We're working with our ops people, with
Okay.
the ops people at Mariner, to get all the information exchanged
Great.
as quickly and fluidly as possible.
Thank you. We appreciate
Sure.
your work during this transition.
You're welcome.
Awesome. You want to adjourn?
Motion?
Yeah, let's go. Have a great day.
You all.